Welcome you all in this chapter. So this is again another chapter so that we'll be covering about revolver facilities. As you know that in previous session or previous chapter we have covered about term loan, what is term loan, how term loan works and all. But in this session we are going to discuss about revolver facilities. Revolver facilities. So it's a very interesting, term that you should know it, but make sure that you are attending this video till the end because I'm going to cover so many important elements of revolver facilities and all. And again, if you haven't checked list of the other sessions of the same topic, loan syndication topic, then go and check the description. Already we have provided a few links so that you can refer and attend the previous session as well to understand the background of all the series and everything. All right. And one more thing, if you haven't purchased or let's say subscribed or like to this channel, then do it quickly and click on bell icon, so next time whenever we upload any new session on any aspect, so you will receive notification so that you can attend in free of cost. All right, so let me take you to the next level to see what we have, what is revolver credit, revolver facilities and all. Okay, so let's start the discussion. If I talk about revolvers, so you can say revolver, it means reuse. Reuse of what? Reuse of loan facilities. So what it means, see here I have decoded already. Revolver, it means reuse of loan facilities. For example, let's say you have loan amount of let's say facility 1 lakh rupees loan amount facility provided by the HDFC Bank for let's say 2 years. So it means now in this case you have limit of 1 lakh so that you can utilize it. For example, let's assume it you have utilized January to let's say June, for 6 months you have utilized 50,000 out of 1 lakh. So you need to pay only interest payment on this amount. All right, so you can repay this, and again you can utilize, means again you can withdraw the same commitment. Maybe let's say 1 lakh this time you want to utilize it. So that's how you can reutilize the capital approved limit. So up to this limit you can withdraw the amount again and again as and when required to you, and you can manage your credit very well. And here, so you can apply the logic. It means, I would say, credit card, credit card, how credit card works. Let's say credit card limit is 1 lakh and expiry, it means card carry expiry, correct? Expiry is 2027. So up to or until 2027 you can utilize this amount, right, for your maybe let's say spending or any need, if you have any needs. So basically credit card purpose is to help you or assist you to mitigate or manage your daily expenses. If you are facing any current, let's say, liquidity and you don't have any cash at all, then you can use that credit limit. But if you see, your credit card is also one of the revolver facility which is given by the financial institutions to you, means at an individual level, so that you can utilize that credit facility if you have any financial contingencies or financial need. Am I right? So credit card, it means it's a support. It's a support or it's a oxygen. If you need that, then you can open that and just take it. All right. So same way, if I talk about revolver facility, see, revolver facility is a credit card of a companies. Credit card of companies. If company, let's say, if XYZ company has a longer their uh, cash conversion, period, or maybe receivable conversion period, in that case, company might require additional cash flow or positive cash flow, I would say, maybe to reinvest or maybe to manage their day-to-day operations or to mitigate the additional capital requirements and all. So it can be any different reason that depends on the business to business, and for that to fulfillment of that capital requirement, companies can apply for additional revolver facilities. And revolver facilities is like exact credit card. So that credit card offers, or that revolver facility offers facility to spend that amount as and when required, repay it, right, and then again redraw, redraw, or I would say reutilize. So this is how, until, as I said, until 2027, means depends on the expiry, so that as a company or as an investor, you can utilize that amount until 2027. This is how your revolver facilities works. So let's see, I have some interesting things to walk you through. So let's start with that. I hope now you got the idea about revolver facilities. It means what is exactly. So revolver facility, it means the revolver facility. It's a credit facility. Revolver, it means again reuse that you can do it. Refer to a common loan that acts like a credit card for large companies, as I said, and even investors, you can say. All right. And along with term loans is a core product in corporate banking. So it means revolver credit or revolver facility is a core product. So it means most of the institutions offer this facility to utilize their credit limit or utilize their advances or loans in an efficient way. Because here, see, you are paying interest payment for only utilized amount. You are not paying interest payment for entire things. Of course, there would be other things. Definitely, they'll charge it as a different expenses, or maybe upfront fees or unused fund fees and all. So that is a different case. But yes, here in case of interest payment, of course, you can save your interest payment. Maybe your need is, let's say, 1 year, but your approval limit is 1 year, but you want to utilize only 20,000. So use 20,000 and only pay interest payment on that 20,000 amount. And that's what it becomes very easy for the businesses to have a credit limit in place to mitigate their all different level of expenses and even contingencies as well. Contingencies, it means emergency that I'm talking about. Same applies to the fund manager as well. If fund manager has any facility as such, let's say revolver facility from the investor, so fund manager can utilize that in an efficient way. So if fund manager has any investment opportunity, then only fund manager will call that revolver facility. Otherwise, fund manager will not, call any or will not initiate any capital call as such. Because ultimately, if fund manager issue any capital call and if fund manager has no investment opportunity in place, so it means ultimately it will affect on the fund's total return. So same logic you can apply in private equity, same logic you can apply in debt fund, same logic you can apply in credit fund, same term, or I would say logic you can apply in private equity funds, credit funds, SPVs, and even in normal corporate loans as well. All right. So with revolver, with the revolver, the borrowing company can borrow at any time up to some predefined limit, as I said, like credit card, and repay as needed over the term of the revolver facility, and usually this facility would be for 5 years, and maybe you can see duration less than that as well. That depends. Now if I take the example, let's take the example, investors like us. Investors, of course, they invest in PE funds, right? They invest in financial institutions like bank, let's say HSBC, let's say Blackstone. And here Blackstone's offer let's say funding to the ABC Corp. ABC Corp is looking for additional funding for growth, or maybe their daily expenses. So you can, in short, you can say cash flow, positive cash flow. So they want it to run their business operations and all. And same way, you can see banks also offer same facility. Cash, it means banks also will offer same facility to the ABC Corp. And if the ABC Corp, let's say, require any fund, of course they can issue the letter to the bank or maybe to the private equity funds to provide funding as it was committed as per the facility. And whenever they go ahead with this facility and all, they ensure that enough agreements like assignment agreement is signed or in place, so that help all counterparties to ensure funding and everything or other details and all. And in a system also you might see sometime details like facility type, revolver facility, term loan means term for, of course, for 5 years, 6 years, maybe 2 years, 3 years, depends. Commitment fees and unused fees. Here, see, in a credit card also, if a credit card limit is, let's say, 1 lakh, bank will, of course, anyways, bank will charge commitment fees or unused fees on your total 1 lakh amount. 1%, 1.5%, or maybe less than that. So depends, but they'll charge it. So similar way here in a revolver credit facility, commitment fees and unused fees will be charged on unused fund or uninvested fund. It will be charged. And then facility limit, let's say facility limit is 10 lakh, and then interest payment. Interest payment, it will charge or paid out on only used amount. Let's say this is the credit card. To understand in a better way, this is the credit card. So you can say it's a revolver facility. All right. So here the assumption is 50% amount utilized, means 5 lakh amount, let's say, withdrawn, and 20 let's say 2 lakhs amount again spent. So cash, withdrawal and spend. So total, if you see, 7 lakhs. So where the borrower will only make interest payment. So it means L means LIBOR plus 5%, but at the moment we don't have any LIBOR. So you can guess it what we have for different markets and all. Guess and post your answer in comment section. So total spend amount, if you see, 7 lakhs. So 3 lakhs still you can see as a pending balance or unused balance. So on unused balance, 1% it will charge, or maybe less than that, depends on the ratio, it will charge. So it means company will pay unused fee on 3 lakhs and interest payment on 2 lakhs plus 7 lakhs. So this is how your credit card works. And that's what, if you see, I rightly said, revolver credit facility means it's a corporate credit card. If you have a requirement of a fund, then you can swipe this, or you can initiate capital call or ring phone to the bank or private equity funds. Hey, look, we have signed agreement as a revolver credit and now I need a fund. Can you please arrange fund, let's say 1 lakh, 2 lakhs, 3 lakhs, because my facility limit is 10 lakhs. So up to 10 lakh, so they can withdraw or they can spend. So similarly, if you have a credit card of 10 lakh rupees limit, so you can definitely utilize the 10 lakh rupees and pay interest payment to the bank. So same way here you can say it. So revolver credit facility, it means it's a credit facility like a credit card. It's a credit card. which is offered by the financial institutions and banks to the corporate houses or companies or even fund managers if they want to invest in XYZ institutions and all. But yeah, so this is how your revolver credit facility works. All right. And the important is, while an insignificant source of return, commitment fees are still charged by lenders. So it means who is lending money, right, to keep the line of the credit available to be drawn upon on an as needed basis. So it means if you need, you can withdraw it, and that's what, if you want that credit line to be alive, then we'll have to pay again commitment fees and unused fees as well on time to time, because basically it's a processing fees and the other expenses you would see in the business, and that's what you need to pay it. Unused fees on unused fees. Let's say you have limit of 10 lakh and you haven't used for a year. Just an assumption. You just applied for a limit because you wanted that, if something happened, then at least you have a credit limit and then you can withdraw and utilize that fund. But let's say fortunately, the everything was good, or you did well, and that's what, you haven't utilized this amount. But still, if you see, 1% amount it will be charged for 365 days. So it means calculate for one day and then multiply with the days. Let's say 5 days, 2 days, 20 days, 160 days, 180 days, depends on the days, how much days that it was. But yeah, 1% that you can charge on this amount if you haven't even used single penny. So that's what unused, it means you haven't withdraw that amount, so you will have to still make a payment of 1% to the lender. Otherwise lender will directly cancel that agreement if you don't make a payment. Because see, anyways, that lender will have to make that payment available in the account and freely for you. And if you don't make a payment, or if you don't make a, let's say, fees or unused fees as such, why that lender will offer that facility ultimately? So that's what. But yeah, it's like the same credit card as I said. All right, I'll take you ahead. So we have one or two practical examples as well, so that I'll walk you through. So now try to understand few things, how we calculate unused fees. So from an interview perspective, or maybe from a processing perspective, sometime you will have to calculate all of this and update it in in the CDO, means collateralized debt obligation system, or maybe CLO, collateralized loan obligation system. And there are other applications as well, like loan IQ, and there are many more. So where we need to update all of this information, or calculate and update in that accounting system. If you're a part of trade processing team, again you will have to work on same thing. If you're a part of recon team, you will have to calculate and then ensure whatever payment you have received, it should tie with the breaks or accounting system. And if you're only part of let's say front office or maybe middle office, then you will have to calculate everything, and it should be on document as well, like funding letter, pricing letters and all. And that's what calculation formulas and all other key aspect and information and input is very essential. I hope you got this idea about, means this revolver facility and everything. So now let me just explain about few other things. Commitment fee formula. All right, the formula used to calculate the commitment fee on the unused portion. Unused, it means the amount which you haven't withdraw yet. So that amount would be your unused portion of revolving credit facility. Revolver is as follows. Commitment fee. Commitment fee, it means unused revolver capacity. Let's say total commitment you had, I'm assuming 10 lakh, but you haven't used, let's say you haven't used this amount total, and your commitment percentage is 1%. So let's calculate in this way. Whatever fees would be, that you will have to make a payment. All right. So here, take the example, practical example. Let's say revolver commitment fee calculation example. Suppose a bank and company have agreed on 100 million transaction, right? Financing package that comes alongside revolver with the following: maximum capacity utilized, so that institution only utilized 40 million, unused commitment fee, and here unused commitment fees ratio is 0.25. So the 40 million is not a debt capital that is received immediately, but rather represent the maximum amount of available capital that can be taken out if the company faces a shortfall in cash. If we assume the company does not need to draw down from the revolver and its free cash flow are sufficient to meet all expenses as well as mandatory repayment, then commitment fee in that particular year equal to 1 lakh. How you can calculate? Just calculate it. 40 commitment fee, your percentage unused fees percentage into 40 means facility amount, so that you haven't used it. It was allowed, it was given that limit for that particular year, but you haven't used it. But still bank will charge this amount on 40 million, almost 1 lakh dollar or 100k USD. It will be charged, or let's say borrower will have to make a payment to the lender. Otherwise, lender will not allow, or definitely a lender will reduce that credit limit if you don't pay this amount, and this is becomes your commitment fees. And from an interview perspective, you may expect question how we calculate commitment fees and all. So you can note it down this formula and practice, for your interview. All right. So I'll take you ahead. What is the definition of commitment fee? See, commitment fee, it means senior loan agreement with revolver credit facilities are often structured with commitment fee as a part of the lending. So it means whenever we see the revolver facility, of course, commitment fees will come into picture. And here the fact is certain lenders charge a flat fee, or that you can say front fee or upfront fee, all right, of the total loan amount. Let's say total loan amount is 1 billion, then you might see directly 1 lakh dollar, or maybe let's say 500k, 50k, 20k fees directly it will charge. So that becomes your front fee. But the far more common type of pricing method is to charge only for the unused amount. Unused, it means whatever amount, as I said, total facilities, if this amount, utilized amount is let's say 70,000 and unused which is 30,000. So only on this amount you can pay your commitment fees, because on this amount interest payment it will charge. Simple. Right? And therefore interest is charged on the revolver only. So it means this amount only on the amount drawn it means utilized amount, drawn amount or drawdown amount you can say, per the lending agreement. And all these terms you would see in assignment agreement. So it means in lending agreement. You can check all those terms. All right. So generally the standard commitment fee typically ranges between 0.25% to 1% annual fees paid to the lender. So this is the generic ratio which even I have seen practically whenever we were dealing with this loan agreements and all. And guess for you, so again it's like assignment, you can prepare for interview with me. Guess what is first lien, and you can post your answer in comment section. What is first lien? All right, so you can try it, otherwise I'll take that in next session as well. Here if you see, we have two different examples. One is Boeing said to seek another 4 billion of liquidity from banks. And if you see that Boeing Z they have taken or applied for a revolving credit facility could grow to as much 6 billion. Revolver loans typically used as a backup form of liquidity. So see this. So it's like a credit card and they wanted the liquidity. All right. And that's what they have taken it. So another example we have Petco company, Petco Health and Wellness details 500 million ABL. So this company wanted 500 million ABL. But if you see the important details is, so read few information so that you can relate. Petco Animal Supplies Inc. disclosed that on March 4 and the company entered in 500 million 5-year asset-backed or asset-based revolver from a group of 10 lenders. So it means here if you see 10 lenders offer credit facility or credit card to the Petco Health with LIBOR plus 12.5, you can say 17 interest rate. Whenever you would see like 175, so it means 17.5 or 12.5 in that way or maybe 1.25. So that depends on the base or BPS points, if it is in 100 or 1000, depends on that. All right. CT, Goldman Sachs, Bank of America Securities Credit Suisse, UBS, Wells Fargo, and one acted as a joint lead, arranger. CT is administrative agent, so CT would be here, where arrange everything and then all will participate and provide funding. ING Capital, Simon Capital Services, and other, they'll also participate in transactions. Transaction, it means they'll also participate as a third party transaction, and the facility is covered by springing in fixed charge coverage ratio set at 1x. Proceeds are on mark for working capital and general corporate purposes. So it means this institution want this money for their different general purposes. If you see general, it means again that's what I said. Corporate companies apply for a credit facilities or credit revolver credit to mitigate their general expenses. Petco recently completed 1.5 billion first lien term loan to refinance its existing capital structure. And San Diego based Petco is a retailer of premium pet food supplies. Okay, this is a company information, rating and all. Rating also matter a lot. I'll cover that slowly and steadily, how rating covers that impact on loans and everything. All right, but yes, so you can follow all this information on Bloomberg as well if you are interested or keen to learn all of this inputs and all. So just follow the that market news or financial or economics news or loan market news, so that you can read different deals and their structures and everything. So you might see more flavors in transaction or real transactions, so that I cannot cover all the scenarios, but you would see that while working on such a transactions and all. But from an interview perspective, so you may expect comparison between revolver facilities and term loan, or maybe term loan or a delayed drawn. So in next session definitely I'm going to jump on delayed drawn term loan, how it works and all, and at last definitely we'll do the comparison as well between term loan, then delayed drawn, and your revolver credit facility, how they are different from each other. All right. So of course this one is very interesting product, and most of the companies they use this as a main term loan. The reason is this gives more flexibility to the corporate companies and even fund managers to utilize their credit limit in an effective way. The way we in normal life we use credit cards for a different purposes. So similar way in corporate, that credit facilities companies they applied for, and then they use that credit facility for their different day-to-day expenses or working capital requirements, I would say. So this is all about your credit facilities. All right, but yeah, so I'm done with this, but I would like to give you a few tips. If you are looking for any interview as such, if you're looking for any interview as such, just go through it throughout this all the sessions, whatever sessions that we have uploaded, just go through it, understand the products and features, understand this. It's a very important one. And then target the companies. All right. And see the processes as well, whether it could be recon. Recon, it means generally we'll call it as a bandit team, maybe trade processing, settlement, middle office operations. You see that how processes works and all. And then prepare your resume accordingly. And then definitely once you apply, then you will get a job as well. So that's how you can plan it out for your jobs as well. And if you need or if you're looking for any guidance or coaching or consultation, training or any courses as such, if you're looking for that, definitely you can text us on this number 7387609230. So we have already trained to the more than 2000 plus, working professionals, and definitely if you approach us, I would like to train you on all these products as well. So, anyways, I'm done with this session. If you need any clarification, definitely you can post in comment section, and also you can give your feedback as well. But yes, don't forget to share this content with your colleagues and friends also. Let them also learn it. You can share with your team as well. So thank you. Thanks a lot. We'll see you next session on different topic. Thank you.